And I'm sure that's what we all want, just to improve our financial situation, build up our nest egg so that, we can be more comfortable, live life the way we want to live, and just be in charge of our own financial destiny and our financial independence. All right, what's going on, guys? Welcome back to my channel. My name is Elliott Ware, and if you're watching this video, you're probably someone who wants to learn more about investing, wants to become more financially literate, learn about assets, making money, stuff like that. And if that's you, I got a really exciting video for you today. And today we're going to be talking about investing, specifically, one of my favorite and what I feel like is one of the most effective and beneficial ways of just investing and building money, and that is ETFs, also known as exchange traded funds. Also, if you haven't already, I'd appreciate it if you subscribe to my channel just to be locked in with all the future content that I got coming. Also, if you like this video, be sure to give it a thumbs up too. It really helps me out, and I appreciate it, as well as also leave a comment for any kind of future content that you want to see. Let's get into the video. Now, what ETFs are basically index funds that are, reflective of certain stock market indexes. So for example, and what's really cool about ETFs is they're a great way to just put your money into an asset and let it build over time. And that's one of the key things to just about investing, is letting your money build over time. And we'll talk about that a little bit later. But also with ETFs, I mentioned they are an index fund reflective of certain stock market indexes. And so basically, index funds have holdings of various companies, and by buying into an index fund or an ETF, you can buy into a little piece of each company. So it's a really great way to just put your money, diversify your money into a fund or into an index, and really just, get solid returns on your money. And some indexes are reflective of the entire stock market, of the performance of the entire stock market, such as VTI and VOO, which we'll get into later. One thing about investing that is very important and that I want to talk about really quick is compounding interest. And compounding interest is basically the way you see, gains and returns over money that you've invested in various assets. And compounding interest is basically, putting your money into an asset that generates interest and leaving it there over time and allowing the interest on that principal investment to really continuous investment installments over time, letting that build and letting the interest on just all of that investment kind of compound and really grow over time. So for example, let's say we have $1,000 and we put that into a specific stock. And over the course of a year, the stock grows at 10% interest. So it grew 10%, right? So at the end of that year, we now have $1,100. So you see how, once we put our money into the investment, into the asset, we allow it to build over time, in this case 10%, and now we have more money a year later. It's all about volume and investing and just putting your money back into these assets and letting it again grow over time. And when I say over time, this can be anywhere from a year to 5 to 10 to 20 years. And from a lot of the research that I've done, the 10 to 20 year range is really, when you see the most gains on your returns and investments. That's what you hear a lot, the long game when it comes to investing. I know that's a long time, 10 to 20 years. I get it, that's a long time, but that's time that's gonna pass on regardless. And you kind of want to put yourself in a good financial position for when that 10-year mark or 20-year mark comes. And you want to have assets, you want to have money in places that generate value and returns so that you'll be in a good financial position, when that time comes. And I'm sure that's what we all want, just to improve our financial situation, build up our nest egg so that, we can be more comfortable, live life the way we want to live, and just be in charge of our own financial destiny and our financial independence. Okay, so now we can break down some various index funds, of just a few of the big ones. So the first one is going to be VTI, which is the Vanguard Total Stock Market Index. This index is reflective of the entire stock market, i.e. the total stock market index. So what's really cool about this one is as the stock market performs, so does this ETF. And you know, historically, I think with over the past like 30 years, 40 years, some stock market has, you know, performed around or grew around 7% per year. So on average, you're seeing 7 to 8% return on your money. And the same really applies to this ETF as well. So again, great index fund to buy into, VTI, if you're interested in just buying into the entire total stock market index. And this may be a really good safe play because again, as the stock market goes, so does the ETF. So if the stock market is performing well, so is the ETF. Another index is VOO. This is another popular index fund, especially for beginners like myself and, you know, and maybe you if you're watching this video. And VOO is basically the Vanguard S&P 500 index, reflecting the S&P 500, you know, stock market index, which tracks the top 500 companies in the stock market. So again, as those top 500 companies perform over time, so does the performance of this index. So a really great, you know, really great, solid, you know, effective ETF to park your money into, and again, let that interest build over time. Another ETF is the Invesco QQQ ETF index fund. This fund is reflective of the top 100 non-financial companies in the stock market. These companies include tech companies like Apple, Amazon, Microsoft, a lot of tech companies, but also other companies like PepsiCo. So, you know, it's also diversified as well within this, you know, QQQ index fund, but kind of sticking away from the non-financial services company. I'm also interested in financial services companies as well, and they make various ETFs for financial companies specifically, and I may delve into those in a future video. So, you know, the Wells Fargo's, the Goldman Sachs, the Chase Banks, those, you know, financial services stocks as well. All right, guys, that's a wrap on today's video on our discussion just about ETFs, index funds. I really hope you took something away from this video. I hope you learned something. I hope it kind of sparks your interest as far as just investing in financial literacy. I'm really big on that, and that's something I want to get into more, just like on this channel with my videos. I've made financial videos in the past, and I'm extremely excited to make more in the future, just to talk about this topic and talk about this topic with you all. If you enjoyed this video, I appreciate it if you give it a like. As also subscribe to, you know, just for future content. If there's anything, you know, financially related, fitness related, book related that you want to hear me talk about, feel free to drop it in the comments below, and I'll see you on the next video. Thank you very much.